Hi, I'm Katie with Riverside Wealth Advisors, bringing you some current events. Over the past week, we have seen some big headlines in the news regarding the stock market, inflation, and tariffs. So here's a quick recap. The stock market exhibited mixed reactions to recent policy announcements. On February 10th, President Donald Trump announced a 25% tariff on all foreign steel and aluminum imports, set to take effect on March 12th. This move aimed to level the trade playing field by matching import taxes other countries impose on the U.S. products. Despite initial concerns, the S&P remained virtually unchanged, edging up by less than 0.1% following the announcement. Subsequently, on February 13th, President Trump signed an executive order to implement a reciprocal tariff targeting countries with protectionist trade policies, including European Union, Japan, and India. These tariffs are designed to match the tariffs these countries impose on the U.S. imports and are set to take effect on April 1st. The announcement led to mixed reactions in the stock market, with the S&P and the Dow Jones Industrial Average experiencing minor gains, while the Nasdaq Composite saw some slight decline. The recent tariff measures are part of a broader strategy to address trade imbalances and to protect the domestic industries. The reciprocal tariffs aim to counteract protectionist policies by imposing equivalent tariffs on imports from countries with higher trade barriers. While these actions are intended to support the U.S. businesses, they have raised concerns about potential retaliatory measures and broader impact on international trade relations. Inflation's concerns have been heightened due to the new tariffs. The Producer Price Index, or the PPI, for January rose 3.4% from the previous year, exceeding expectations of a 3.2% increase. This uptick in the wholesale prices has led to diminished hopes of a near-term interest rate cut and raised potential rate hike concerns. Economists warn that the new tariffs could push the core inflation rates above the 3.5% this year, potentially affecting consumer prices and economic growth. To wrap it up, we saw significant policy actions aimed to addressing trade imbalances through new tariffs. While the stock market showed resilience, concerns about potential inflationary pressures and broader economic impact of these measures continue to be a focal point for analysts and policymakers. So if you have any questions about how this might affect your portfolios and your retirement accounts, we're always available to help at Riverside Wealth Advisors.